The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Wednesday morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN. We have a little bit of market volatility overnight. Quite the two-way market yesterday. S&P's right now up by 15 points, up by about 0.2%. We were over 6,900 briefly, about 5 a.m. We're 25 points off that level. So you have the S&P's up more than 40 points at one point. You can imagine we might get some volatility today. We had plenty of volatility yesterday. NASDAQ 100 reaches a high of about 24,960. We're 130 points off of there, but we're still positive by 0.3% right now. Basically right back to where we were at the highs of 930 yesterday in the NASDAQ 100, up by 0.3%. The Dow up by 60 points, up by 0.1%, 49,675. And the Russell flat this morning. Bitcoin down $500, 67,290. Crude catches a bid. Yeah, seems like tensions are ratcheting up in Iran, no matter where you look. And why not? I mean, one of the first headlines, I was going to kick it off. The vice president saying Iran's ignoring core U.S. demands in the talks. Nuclear talks made progress is what Iran says, while Washington warned all options remain on the table. Nonetheless, you see crude ratcheting up this morning, but from 5:30 this morning, we're up almost $1.50 from there. Crude up by 2.6%. We jump to yields, a little bit of lower price, higher yield right now. You have the 10-year negative by 6 ticks at 112.30. We were at 113.5 yesterday. So quite a recoil. The 10-year was almost pushing 4%. We're at 4.08. 4.08 the yield in the 10-year. A little bit of higher yield. Dollar strength with higher yield. 97.38 right now on dollar strength. Gold holding up well with dollar strength. Maybe in the face of that geopolitical risk with Iran. Gold up by $70, up by 1.4%. Silver right now up by $3.22, up by 4.4%. What I will say in silver, folks, is, you know, when markets are ripping lower, this is how they have a tendency to do it in the silver market. Okay? What you do is you wake up and you say, man, that's awesome. Look at silver, up $3. Look at silver, up $4 from the lows of last night, up $4 from where you were. But guess what? All we've done is gotten back basically the entire move that you had lower last Thursday, when silver dropped from $83 down to $73 in a heartbeat. We're at $76. You compare that to gold, a little bit higher, but as you can see, right? So we're catching a bid. But boy, some of these moves lower. We'll see if today holds, but we got geopolitical risks. You got crude higher by $1.63, metals higher, and dollar higher this morning. So yeah, that was the article. We're going to kick it off, and that's what's hitting things. So Iran has failed to acknowledge core demands in the talks here Tuesday, after which Washington said it agreed to give Tehran 2 weeks to close the gaps between the sides. But yeah, you got forces lining up. And when you're talking about, hey, everything's on the table, as they say. Let's take a look at gold and silver. All right, so yesterday, you finally got a little bit of an uptick in volume. We've been talking about the volume in gold. Yesterday, though, still in context of what we have been doing, not a big day. Volume has not come back into these metals markets yet. We'll see if the potential with war in Iran does it today. But as of right now, because even yesterday's move, 160,000 contracts. I mean, you know, if you're in this market, a meaningful day, you got to be over about 200,000 contracts. Okay, look how often. Here's the bar of 200,000 contracts. Look at that run up to October. Right, you were doing over 200,000 contracts in that run up to October from September 19th until almost the beginning of November. We haven't done 200,000 contracts in almost 2 weeks. Yeah, ever since that pullback to 4,800, we have had very little volume in the gold market. I know I talk about it even every day. But it's glaring, folks. It's glaring on the chart how much volume we're doing on how much lack of volume, I should say, we're doing right now in this metal market. That could mean even more volatility than usual, right? You got a market that's had a heck of a run, and now you have very little volatility in there, and the swings could be even larger. So keep those spikes up, as I say. All right, we take a look at the volume on the indices. NASDAQ 100. Not really what you want to see. Now, that was quite a bid. Okay, we bounce off these lows. You didn't get below the lows, but you did find a bid, technically a red day there. But boy, you had a day that saved itself, because you break that, you do it with volume, you're in trouble, man. You're heading back to the November lows in a heartbeat. You did have some buying, even though it's a red day. As we bounce and reject that bottom, you hit 24,400 and change in the NASDAQ. And yeah, you did 744,000 contracts. S&Ps, you actually had a positive day. Same thing almost, right? Huge rebound from the lows. We hit a low of 67.91, and you finish it out at 68.62, almost 70, no more than 70 points higher. And you do it on more volume than the prior day, but not quite as much as that slide we had on Friday. You take a look at the miners, the GDX. Now, you look at this weekly volume since October. Now, this is the miners, not the metals. Okay, you had a real run up to the highs in October. You had a drop off in volume right up until we hit the highs. Okay, the week of January 19th, when we hit as high as 107, very little volume compared to what we have, and then you get the sell off, and then you did get some nice strength there the week of February 2nd. You drop off a bit yesterday. The miners have held up very well considering the run they've had right now. And that volume, the volume we had recently, the last couple of weeks, it's decent volume, and that you're going back to at least the volume we saw in October. So very little volume right now in the metal, but not quite as pronounced in the miners, to give you both sides of it. Not quite as pronounced at all in terms of the drop-off in volume. You still have some volume in the miners, but boy, the metals, where did everybody go? As I talked about, 620,000 contracts last week in gold, one of the lightest volume weeks going back years if you're not counting holiday weeks. All right, and talking demand. So mortgage rates. Now, as I mentioned, yesterday you had the 10-year almost hitting 4%. We're back at about 4.08. Mortgage rates sink to the lowest level in a month. I mean, quite a headline. Lowest level in a month. Come on. You can't give me anything more than that. A year, 2 years? No, 30 days. That's the lowest rate you're getting. Nonetheless, you're down to 6.17% from 6.21. That's the average 30-year with a conforming loan balance, $832,750. How about that for a conforming? You're going to have a conforming balance that's going to be $1 million soon. And that's just a conforming balance, right? Applications to refinance a home, rising 7% for the week, 132% higher than the same week a year ago. There's always so much volatility when you're benchmarking something like that against a year ago. Yeah, because look where we were a year ago, right? I don't even have to look at the yield. We have dramatic higher price and lower yield. Well, it doesn't really matter where we are versus exactly a year ago, okay? Because guess what? A couple months later, we were at the same yield. A couple months before, we were at the same yield. Benchmarking against a year ago, no, yields were dramatically higher. So everybody took a break from refinancing. Now they're back to near 4%. They're refinancing again. It's just a variance. We're coming back, folks. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and technique to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger Zen, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger Zen, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This portion of the Morning Market Kickoff is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC. Welcome back, folks. We have the NASDAQ 100 up by about 0.3% right now, 24,838. And we jump around in terms of NVIDIA, ARM Holdings, SoftBank. I mean, it's all Meta in here as well, but you have ARM shares a little bit higher in the pre-market, up by about $3 as NVIDIA shakes up their AI bets. So they offload what they own in ARM, and that was 1.1 million shares. Worth $155.8 million. So NVIDIA filed to the SEC on Tuesday showing it had offloaded that stock, held the shares since 2023. And yeah, they were really going after that company. Remember in 2000, what was it? Yeah. NVIDIA's investment in the IPO came after its failed bid to buy the company outright for $40 billion. A deal that was initially agreed in 2020. They faced regulatory hurdles on both sides of the Atlantic. And now ARM has a market cap of about $135 billion. You know, wouldn't have been a bad investment, but things have gone all right for NVIDIA since that period of time as well. So you have NVIDIA a little bit higher. You got ARM a little bit higher right now. The market's a little bit higher. You jump over to ARM Holdings. A little bit of a boost on that news. Up to 129. You jump over to NVIDIA right now. There's your action to 188 over NVIDIA. Jump over to Meta. Down by $5 for Meta shares. And yeah, they sure do in terms of where NVIDIA's invested, basically everywhere, right? We take a look at some of the other chip stocks as we get ready for the open. Intel shares trading basically flat right now. We jump over to some of the other high flyers. Broadcom shares down by a few bucks. Lam up by a few bucks. And we got Clack right now up almost 25, 30 bucks. All right, we jump over to healthcare. These GLP-1s keeps going. Now, Lilly, they're negative this morning, down by a few bucks. But check out this one. Oh, not that one. So it seems like, and it's not surprising, right? Obesity impacts so much that you're going to start seeing these for so many different factors that are related to obesity. And that's my simple understanding of it. But boy, it sure makes sense. We know obesity is a problem, and that's putting it lightly. And so you got Zepbound, which is the weight loss drug from Lilly, tirzepatide. It's a GLP-1 and a GIP. And then you have Taltz, which is a psoriasis drug. If you combine the two, guess what? You drive weight loss and better skin clarity. And I didn't realize how much, and it would make sense. It's not surprising, okay? But 61% of people with psoriasis are obese. Not surprising. Or overweight. With at least one weight-related comorbidity, Lilly said. 31.7% of patients who received both with at least met the goal with over 50% reduction in psoriatic. Boy, talk about my brain. 10% weight loss, much over the placebo. 27% of patients who received both reached complete skin clearance and 10% weight loss, as opposed to just 5.8% of patients with just the psoriasis treatment alone. So you go from almost 1 out of 3, almost 1 out of 4 patients have complete skin clearance versus what is 5.8%. You're talking about what, 1 out of 16? 1 out of 4 people had fully clear skin to 1 out of 16. It's just mammoth numbers, and it's not surprising. So those are the next studies coming down the line. And that whole area, what really got me kicked off on this is Bloomberg had a big take. I think it shared it in the Den recently, and I'll share it again, because what's amazing is that how quickly generics are coming to this market. And yeah, here it is from the beginning of this year. I got 2 of them out here. Yeah, this is the one I was listening to. Okay. I wonder if I can gift this as a gifted article. Let's see. But this is what I was listening to. It's a 17-minute take, and how generic Ozempic is going to shake up the market completely. And of course it is, right? Everything we've heard of is that these are so expensive. But now you have, so the first article I just showed you was in February. And it went off this article. Okay, and I'm jumping around, but when I see these ones about Lilly, and then you see the fact that they're going to be generic, but then there's always going to be the forefront, right? Because what happens is, and this is what they talked about, man, I got quite an education, like instantly. This podcast, folks, I'll post this in. I'm not sure if I can share this as a gifted article when I'm talking about this one, okay, but I will post it, and if you can find it on the internet, that 17-minute clip, it's a great clip, and what it talks about is this article here too, okay? And I didn't know this, but in Canada, okay, Ozempic, semaglutide, which is the active ingredient or the hormone or whatever you call the drug, okay, Ozempic's the brand name, just went generic. So Canada is about to have generic Ozempic. China is also going to open up in a couple months. The U.S., I think it's like 2032. And then you have Lilly with their Zepbound, which is... I always get it wrong. Let's see. And I'm forgetting the name of that drug. Tirzepatide. Okay. And that has better results. But now they're going to start studying for everything. And that one's more protected. But then you see that Lilly's coming out, right? And then you got retatrutide, which is the next peptide. And so, hey, you see studies like that, man, it is not going to stop. And I'll share this one in the den because it's remarkable how quickly it's really going to be. And you're going to see Canada. There's going to be generic Ozempic everywhere, and I say everywhere in Canada. And then you're going to have to deal with the fact that these companies are going to face a problem when you're going to have drugs coming from Canada where they're $15 a pill and getting smuggled into the U.S. because they're still under patent and much more expensive. And it's crazy how time flies. That was first approved, Ozempic, which is for diabetes, and then you got Wegovy, which is for weight loss, 2017. So 9 years, and now we're about to ratchet it up. But yeah, psoriasis, right? It's going to be everything, man. So, and that's where you're probably going to see, and for the amount of money that people spend on their healthcare, their insurance, it's probably going to be a mathematical play, and that's the only way insurance companies are going to agree to it, right? That it's going to make sense for them to put almost everybody who has a weight issue that has issues from that on these drugs. And the fact that now you're going to get to an area where they're going to be affordable enough that you're going to have generics that are coming down the line, even in the U.S. in the next 5, 7, 8 years. All right, Lily a little bit lower, markets in the green. We're coming back for the opening bell, folks. Stay tuned.
Is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. And yes, we got equities open, and we got a little bit of selling coming into the open, giving up the highs. We were over 6,900 in the pre-market, and yeah, it looks like we're going to kick it off with a little volatility today. Shouldn't be surprising with the type of volatility we had yesterday. Doesn't look like a lot of volatility on the charts right now, but that's only because you're looking at a move from yesterday's lows to highs of 110 points in the S&Ps. So yeah, we get a little volatility. Look at this. NASDAQ goes red. Dow, Russell off by 10 points. There's a drop for you, man. 0.4%. S&Ps up by 3. Yeah, jumping back to those drug companies, man, that big take really got me going. Lilly's off by a percentage. You jump over to Novo, and you know, the smart money figured this one out, right? In terms of, you know, you're in 2024, and in 18 months, you're losing patent protection in Canada, in China. Nonetheless, okay, they're going to have a real difficult time competing. Now, Lilly is too, because you're going to have competition endlessly. You're seeing deals get made. I think they're going to start covering this from Medicare as part of the Trump RX. Maybe it's not Trump RX, some deal they made with Lilly. I think Medicare is going to start covering some of these drugs. Now, where I get confused, and not confused, I just haven't dug deep enough into it. And I know we got some great contributors in the Tiger's Den when we're talking about biotech and health stocks. And so please help me out, folks, if you know it, because it's interesting how these drugs have one side of it is the same drug for diabetes, right, which is Ozempic. And then you get the weight loss drug, which is Wegovy. And then Zepbounds, you get Mounjaro, which is the diabetes drug, and then you get Zepbound, which is the weight loss drug. And some plans now are offering it when you have diabetes, but I imagine that is going to really start to cross when you start seeing endless amounts of studies that obesity impacts everything, and when the insurance uptake really starts to happen. And yeah, it's all about healthy foods across the spectrum. And the other part of that is the muscle loss in those. And that was always, when these studies were coming out early on, you'd see it and you'd be like, man, the muscle loss is intense. But guess what? Many of the people, the ailments they're dealing with, the muscle loss is not as detrimental as the health conditions they were dealing with. But here's the kicker. Now, it's like 60 to 70% of Americans are either obese or overweight. 60 to 70% Americans. I think the article I was just looking at says 70%. Okay, yeah, here it is. Some Health. 70% of adults in the U.S. have a body mass index in the overweight or obese range. Okay, and some of those people are very uninformed, unfortunately, not in their own doing, of what is healthy living, right? And for those people, this does away with the hunger, whatever it is. So you have muscle loss, and even the best bodybuilders, folks, okay, when you have a bodybuilding show, you know, Arnold, the Arnold Classic, all those guys, they do the big bulk where they add a bunch of muscle in the off season, right? And then about 3 months to 4 months before their big competition, they do a cut where they calorie restrict themselves and they cut all that fat off to make their muscle pop as much as they can. During those cuts, even the best bodybuilders in the world lose some muscle, because inherently that's what's going to happen, especially when they load up so much muscle on the body that you can't keep it when you're trying to lose fat and not lose any muscle. But the point being, for a lot of people, they can understand that. And they can understand that what happens is that if you set a diet plan, right, you don't have to lose the muscle. In many instances, you can at least tamp down it when you combine a high-protein diet and maybe you use muscle. And, you know, this didn't mean to turn it into these shows, but, man, I'm reading about, you know, this psoriasis one again today, and they just did the big take on Ozempic becoming a generic already in Canada. And now Canada has a highly regulated generic drug market. And so it might not be best representative, and this is what the big take talks about, what I got from the Bloomberg piece. And find it, folks. It's a great piece if you're trading these equities at all. And what it said was that because it's such a regulated environment, when it comes to generics, it may not be the best representation of actually what may happen in America. China could actually be a better representation. Either way, you're going to have generics hitting the market. We're going to get a little bit of an idea of what's going to happen in America when that happens to the first drug, being Ozempic. But if you eat a high-protein diet, so that's where, you know, if everybody's just losing all their muscles, that wouldn't work. But that's not going to be what happens. There's going to be a way to manage these, and it's going to be making sure that you're monitoring how much protein you're getting and that you're using those muscles. So we know the basics, right? Eat healthy food, get some exercise. But if you do that on these drugs and then you see the psoriasis, I mean, we were talking about this when I heard the big take, and then I saw that headline flash across. Where was it? Yeah, flash across CNBC, nonetheless. So that one's on the radar, man. Pretty remarkable, but you're going to start seeing it for everything because obesity impacts everything. Of course it does, right? Not surprising. Okay, we digress. Back to the markets. S&Ps. So markets in the green right now. Let's check back on gold. Right near 5,000. All right, let's check in on crude. We're going to be talking to our man Teddy Kegstack coming up after the next break. We'll talk a little crude. We'll talk some currencies. Crude sitting at 64.10 so far this morning. All right, what else we got going? Yeah, we've been talking about this one. So Apple, like the ultimate safety play going on right now. Apple's correlation to the NASDAQ 100, just 0.21, the lowest since 2006. They are not correlated to what is going in this market. And yesterday, boy, you talk about the acceleration, man, on Apple yesterday. From 255 to 265, you almost got back basically everything you did in the prior day and then some. We're sitting at 262, but yeah, you know, this is, when you get the markets, it's basically a safety play. Walmart's turned into a bit of a safety play as well. Not yesterday, though. Walmart was down like 4 or 5% yesterday. You're off by 1% today. Take a look at Target, off by 0.4%. Check around to some retail. Kohl's, off by 0.3%. TJX, this thing, just a rocket ship, man. Check out this thing. If you're trading TJX, put it on your chart, folks. You got a nice channel. Since about the lows of 2022. Put it on a weekly. Yeah, it's a decent volume profile. You know, you had some selling at the end of January. You catch a bid with similar volume at the beginning of February. Whoops. But you might be a little overvalued right now at the upper end of that channel. And then you jump to Mickey D's. This is the ultimate one, folks. This one goes back like 10 years. Check this out. Mickey D's from the lows of 2015. Look at how well defined this is. You get out of there during COVID. We get out of there slightly on the pullback of 2024, but since then, just holding that line. Mickey D's down by 0.6%. We jump around to the tech stocks. NVIDIA. We give back slightly, still up by 1.5% right now. Micron slightly in the red. ARM Holdings up by 1.3%. We jump over to Tesla. Flat right now. Some of the other tech companies, Microsoft in the green. We got Amazon with a bid up by 1.4%. All right, folks, we're checking on the dollar. There we go. Good day to have our man Teddy on. Stay tuned, folks. We're coming back with Teddy Kegstad, author of the Tiger Forex Report. We'll talk some currencies. We'll talk some commodities. Always a good segment. We get the dollar up by 292 ticks at 97.44. S&P's up by 17. We're coming back with Teddy, folks. Be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC. Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We got the S&Ps in the green, markets in the green right now. And as we do each and every Wednesday at 40 past the hour, we're going to talk to our man, Teddy Kegstad. Folks, you can check out Teddy's outstanding Tiger Forex report. He writes that every week, new issues Monday, updates throughout the week when warranted. It's only $97. It comes with a 30-day money-back guarantee. Check it out on the front page of TFNN right under that newsletters tab. Teddy Kegstad, good morning.
Tommy.
So, where do we want to kick it off, Teddy? We got some yields were almost at 4% yesterday. The dollar's at 97. We got some action in the yen this morning as well. We got a question in the den saying, could you talk to us about the government bonds over in the yen? Maybe we could kick it off with the yen. What are you looking at this morning, Teddy?
Okay, well, since we're talking about the yen, might as well actually start with crude oil, because that's going to be a little factor with that one. So we had a nice swing low yesterday on an outside day. It was an outside day lower close in crude, and we were laying right on our major directional pivot that we have in the Tiger Forex report. I would say you key off the low from yesterday. Above there, I think you're going to be in a sideways chop up to about $63, up to about 65, 66 bucks. I really don't think you're going to take out the last swing, couple swing highs. Maybe you spike through them. If you do, I don't think it's going to last. Overall, I think that you really have to key off of where yesterday's low was, because if we get below that, $62, $61.75. Once you get in that area, we should start falling back into the 55, area and stuff like that. So I think that we're probably range bound a little bit. You got to realize we're coming off a holiday market too. So, Europe was open on Sunday through Tuesday into Tuesday. Monday, even though the computers were open actually for crude and stuff like that, but still you had a very illiquid market. So today I think is more of a reactionary day. We have some big numbers that are coming out tomorrow and Friday. Might be a little preemptive. Some of the commodities get a little more action before the economic, because tomorrow is going to be, and Friday will be more economic-driven markets, so you won't see as much action in crude. So I think you'll probably see a pullback in that. I wouldn't get over confident. If you're bullish, I'd be very, very careful with your expectations. I don't think you have a really good shot at a very good long trade versus catching a short trade over the next couple of sessions. And that's going to impact the yen. So let me pull up a yen chart real quick. And okay, so for the U.S. dollar yen, we've had quite the volatility in the U.S. dollar yen over the past week and a half, or excuse me, a month and a half. That's for sure. So if you look at how today, you can see that it's very reflective of what's going on with crude. Crude is trading higher. That's where you're getting catching a bit of a bid in the U.S. dollar yen. But if you look at where the currency is at, and this will get to the bond question in just a minute, is that we're coming off of a higher swing low, but in a sideways trend. To lower, really, if you look at the yen versus the crude. So I think that's also another part that's leading that area. That's why I say be very careful with crude spiking and then pulling back, because if that's range bound to begin with, it's going to be very hard for the U.S. dollar yen to, go back towards those major monthly highs that they've had over the past 2 months. So I think you really have to take that into account, that's probably going to be in a very big sell rally forecast. So in those regards, those fundamentals right there, I think those are where you really have to take a look at it. Now, when it comes to interest rates, let's get ours first before we start talking about the Japanese. Yesterday we just came short of our major directional pivot for the 30-year interest rates. That's a big area for the bonds as far as, what has been priced in for what has been done since September, and as far as where we're looking at to not have anything done until probably June. At least that's what the consensus seems to be right now. And I think that you could probably take that one to the bank if Powell was to pull the trigger on cutting rates before he leaves office. I think that would be, well, if anyone would be shocked, it certainly would be me, besides the markets, and that's being factored in. So I don't think you're going to be able to see, at least on our end of the curve, see a very big pullback. I would say that you're probably bottomed out right now as far as rates are concerned. Maybe see a little bit of relief, a little bit of upward pressure on the 30-year and the 10-year. But I'd be very cautious with it. I think you're really set to be pretty much range bound from the levels that we're at. So we're kind of, what I'm saying is we're hitting that extreme. There's no real reason to breach resistance and get a real big rally going, at least until we have a confirmation of the new Fed chairman and perhaps maybe the outlook that they would be taking, especially if it's a easing bias, if you will. Now you want to talk about when it comes to Japan and their bond situation. That's something that I would be very careful with, because the mechanics of what's going on there is, it's not just about whether they're how their financing is going. There's a little bit of a division with the Bank of Japan right now. We know, like, last year was the first time that they just even touched rates to begin with in decades. So I think that you have to be very careful with watching their bond market right now. I think it's more noise than anything else. And as far as its impact on the dollar-yen relationship, like, here's what I think you can see some action is: the yen versus other currencies than the dollar. Okay. When it comes to what's going on with their interest rate market, the polarity between the two of them, I don't think that it's going to have enough of a shift to really, on a trend basis, influence the U.S. dollar-yen relationship, if that makes sense. Now, if you're looking at the yen versus the euro, or the yen versus the Aussie, or something like that, which those are some big trades too, that's where you may see a disconnect with what's going on with the bond market with the Japanese, okay, and especially with the pound. The pound yen may be where you'll see now these crosses, they are heavily traded, but the spread is a little bit wider on those. So you have to be careful when you're trading those. Don't trade them on an intraday basis. That's something you have to be very careful of, okay? But I would say that if you're going to look to trade the interest rate play with Bank of Japan and what they're doing, as far as whether it's auctions or any type of quantitative maneuvers, if you will, which is probably, I think, which is going to be the biggest thing to look out for over the next 3 to 6 months with the Bank of Japan. But with the U.S. dollar-yen relationship, that fundamental, unless there's an extreme move, which that doesn't happen from the Bank of Japan or in the Japanese, I would say just just discount that variable for right now and look at it more as a bunch of noise.
Awesome insight, man. In the poster, they had posted an article from the Times, and there's a lot. And the headline was how the world's most boring market became a battlefield, talking about those Japanese bonds just in terms of the volatility. So I appreciate you breaking it down. Hey,
sure.
How's the weather in Chicago this morning? Because I pull it up sometimes when I'm talking to you because it blows my mind, and I see some big numbers. How's the weather in Chicago right now, man?
Right now it's amazing. It's 54 degrees right now.
I couldn't believe it. I double checked my internet when I was pulling it up. Yeah. It says 51 degrees and beautiful and sunny on February 18th in the Windy City.
It'll be
pretty awesome, man.
It'll be 27 high on Saturday. So
that's it, right? Hey, it's almost March and spring's around the corner. Teddy, yes, thanks for the great education as always. Folks, check out the Tiger Forex report. Teddy, we'll talk to you next week, man. Thanks so much.
All right, take care.
Thanks. We'll be right back, folks.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. You got markets in the green. NASDAQ 100 up by 102 points, 100 points even, we'll call it, up by 0.4%. And yeah, we got a little volatility in both directions to kick things off. Markets in the green, though, across the board right now. Bitcoin down by $700. You take a look at the heat map. That's your NASDAQ. Let's take a look at the S&Ps. You got financials in the green. Banks, JP Morgan up by 1.2%. Goldman up by almost 3%. Morgan Stanley up by 3%. Energy stocks a bit higher with crude trading higher. Healthcare, not the case. Right, in the red or slightly in the red there. Meta off by 1.1%. AMD off by about 2.2%. We jump over to metals. Gold back above 5,000, 5,013, up by $107. Silver right now up by $3.87. And, you know, this is a great market for trading, folks. Okay, you have a low volume, volatile market. But when you're looking for trends, be careful, because we have not caught a significant trend when you when you're talking about swing trading. Okay, there is no sign of strength in this market right now. You can make a case that maybe 12 days ago you got some buying off the lows on February 6th, but realistically it's all been downward action with very little volume on any of these bounces on silver. You jump over to gold. What are we at? About 55,000 contracts. It's barely 10 o'clock this morning. But same thing with gold. Okay, these bounces, folks, 118,000, 125,000, 118,000, 171 on a rip-roaring day to the upside where you traded $325 higher and you only did 171,000 contracts. So in the actual metals, we're looking for some strength there. But markets, we got strength right now. Back in the green. We'll finish it up with a VIX. Why not? VIX back under 20 at 1955. Folks, stay tuned. We got a man, Basil Chapman, growling and prowling. He's coming up with the Tiger Technicians Hour. Steve Rhodes with the Trader's Edge at 11. Fast Market at 12 o'clock. Larry Pesavento live at 1 o'clock. And I'll see you at 3 o'clock this afternoon for the Tom O'Brien Show, folks. Have a great day. Stay tuned. Basil Chapman coming up right now. Thanks so much, folks.